Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Daybreak Weekend, our global look at the top stories in the coming week from our Daybreak anchors all around the world. And straight ahead on the program, a look at earnings from AI giant Nvidia, along with existing home sales data. I'm Tom Busby in New York.
I'm Caroline Hepker here in London, where we're looking ahead to the Group of 20 Leaders Summit in Rio.
I'm Doug Krisner, looking ahead to the upcoming rate decision from the People's Bank of China.
That's all straight ahead on Bloomberg Daybreak Weekend. On Bloomberg 1130 New York, Bloomberg 99.1 Washington, D.C., Bloomberg 92.9 Boston, DAB Digital Radio London, Sirius XM 121, and around the world on BloombergRadio.com and the Bloomberg Business app.
Good day to you. I'm Tom Busby. We begin today's program with Nvidia, the last of the magnificent seven tech giants, reporting its third quarter earnings on Wednesday. And for more on what to expect from the AI heavyweight, we're joined by Kunjan Sobhani, Bloomberg Intelligence Senior Semiconductor Analyst. Kunjan, thank you so much for joining us. It looks like all the stars have aligned for Nvidia, now the most valuable company on the planet, a market cap $3.5 trillion. So what are you expecting from its Q3 results? It's first as a member of the Dow Jones Industrial Average.
Yeah, we expect nothing different this time like we have seen over the last almost 8 quarters now. We again expect a very strong beat and raise. Our call on that is likelihood of the magnitude of the beat and raise to be higher than what we have seen in the last 2 quarters. You know, in Q3 and Q4, Blackwell was supposed to ramp and they had some delay, which has allowed its existing Hopper product line to expand. And we have seen no signs of slowing demand and adoption for Hopper right now in 3Q and 4Q until the large cloud customers and hyperscalers really eagerly wait for the Blackwell shipments in 2025.
Well, we know about demand for those Hoppers, the H200, the accelerators. How about hardware, software, data center, services? Are there any weaknesses for Nvidia? And as you said about that delay in the Blackwells, supply chain issues, have they all been settled now?
From all of our channel checks and supply checks, it seems most, or if not all, Blackwell supply chain issues have been settled down. We have heard that some customers are starting to get the shipments as early as end of this year. So that's a very promising good news. And a lot of other large customers are preparing to accept shipments starting in 1Q. So that suggests there's no more major issues. There will be, however, Blackwell will be supply constrained, as was Hopper in its initial ramp.
Well, let me ask you now, that Hopper has about 90% of the market for these types of accelerators. What will Blackwell mean for Nvidia? And as you said, they're ramping up production now. You expect deliveries this quarter, next quarter to really speed up. What will that mean for the company?
Yeah, so when you look at in terms of market share in GPUs for NVIDIA, you know, they started out with almost close to like 90, 97, 98% on a revenue basis. And slowly, you know, they've trickled down to close to, I would say, low 90s, if not 90s. We think Blackwell will actually stop that. Won't really call it share loss, but actually increase those numbers. You know, Blackwell, especially the cluster of GPUs using their NVLink technology, has really upped their game, if you can even believe that's possible. And there is no other competitive end-to-end product out there. So actually that increases their moat and even makes the share more defensible.
And they sell to the biggies. There's Meta, Microsoft, Alphabet, all of them, big buyers. What about the competition, though? I mean, we've heard Apple, Amazon now making their own AI accelerators, their own GPUs. How does that affect NVIDIA? Or does it at all?
I mean, it does. Look, in terms of long term and in terms of the size of opportunity, it does affect ASICs, which are the chips that these customers design for themselves, which are called, you know, those are the largest risk to NVIDIA because, frankly, there is no other sort of semiconductor company which is a huge risk to them. So that is definitely a large risk. All of these, you know, its largest buyers have already started to adopt some of them their own ASICs in a lot of volume. There's also a possibility, like someone like, let's say, Amazon, who has been successfully using their ASICs for a while now, have also started to offer those to their own cloud customers as an alternative to NVIDIA's GPUs that are running in Amazon's cloud. So that is definitely a risk. However, the AI rally, we think, is in the early innings. What it means is, as of this point, neither their direct customers are slowing down the buying of NVIDIA chips, neither are their customers are slowing down using of NVIDIA chips. So in the near term, you might see both NVIDIA's GPUs and ASICs continue to grow significantly because there's a lot of demand appetite. But once this sort of demand rally matures, that is when we'll really see that fight for each dollar spent.
Wow. And there's no view right now of when that will happen, that slowdown. Not yet, anyway.
No, that's the biggest question we get, right? And we keep a very close eye on it every quarter. And as we have seen from Q3 earnings from most of its largest customers, most of the enterprise, the appetite has actually increased, if you might even believe that. And 2025 looks like another record year in terms of CapEx spend for these AI GPUs and hardwares and ASICs.
Unbelievable. Now, we know that all these other companies, these big tech companies, small tech companies, where they're putting their CapEx is in AI. Where is Nvidia putting their CapEx?
Well, yeah, so, since the launch of its first sort of AI server GPUs, which was called the Ampere product line. So first of all, Nvidia is a fabless semiconductor company. What it means is does not manufacture or produce its own chips. So usually these fabless companies do not spend a lot in CapEx. They spend a lot more in OpEx. Their CapEx is generally just having test equipments, packaging equipments, and just R&D equipments needed to develop their products and their chips.
Well, Nvidia third quarter earnings out this Wednesday. Our thanks to Kunjan Sobhani, Bloomberg Intelligence senior semiconductor analyst. We move next to a look at the uneven U.S. housing market with existing sales for the month of October. That is out this Thursday. Also, what earnings from Home Depot last week and from Lowe's this Tuesday tell us about the U.S. housing market. And for more, we're joined by Drew Redding, Bloomberg Intelligence U.S. home building analyst. Drew, bottom line, existing home sales not doing well. On track for the worst year since 2010. That's according to the National Association of Realtors. So what gives and what are you expecting for the month of October?
So we do think we could see some improvement in existing home sales in October, and that's really reflective of the more favorable mortgage rate environment that we had during September. Remember, these are contract closings, so there's typically a 30 to 60 day lag from when a deal is signed. That being said, the date is going to be stale before it even comes out. I mean, the rate on a 30-year mortgage has gone from the low 6% range in September to above 7% in just a matter of weeks, despite the Fed cutting rates a total of 75 basis points. And we've seen demand ebb and flow with these fluctuations. So we think you could see some improvement reflecting September, but like we said, we think it's going to be stale and there's going to be pressure going forward. If we zoom out just a little bit and look at the bigger picture, existing home sales continue to sit below a 4 million annualized rate, and current activity is the lowest in over a decade. And that really affects the affordability picture, which continues to hover near historically low levels.
I mean, those record high prices on homes, mortgage rates, as you said, back near 7%, but also the cost of home ownership, right? Insurance, maintenance, lawn care, upgrades for furniture, and more.
Yeah, it's a good point, and it's a combination of all those factors. And I think you hit the nail on the head when you mentioned prices, because mortgage rates get a lot of attention, particularly when we pay such close attention to what the Fed is going to do. But home prices are up over 50% since prior to the pandemic, and payments have become increasingly disconnected from incomes. We did an analysis that shows that property values would need to fall about 30% for monthly payments relative to incomes to return to historical levels. So we're not saying that you're going to see that type of decline at the national level in the near term, but I think it illustrates the problem. So we're going to need some combination of, maybe prices coming down a bit, rates moderating, and then further income growth in order to get things headed in the right direction. And it's probably going to take some time.
Yeah, I mean, besides what we saw in 2008, what can bring the price of these homes to a more reasonable level?
Well, I think one thing you're starting to see is that we're having more inventory come to market. The lack of resale inventory has been one of the key themes really over the last several years, and it's been one of the reasons why the new home market has done so well. But if we look in some markets around the country, in Texas and in Florida, we're starting to see inventory levels which are approaching or exceeding those in 2019. And it's due to the fact that you have weaker demand, so homes are sitting on the market longer, and you also have more starting to come to market. So as we get that buildup, we think that's going to put some downward pressure on prices.
So you think we're still going to see a shift in population to Sunbelt states where the last 4 years they've exploded in home sales, home building, or is it going to even off other parts of the country maybe?
Well, I think that's still where you're going to see the population over time continue to grow. That's where, at least on a relative basis, affordability is. That's where a majority of the jobs are. Compared to some of the slower markets in the Midwest and the Northeast. And that's why you see that the builders continue to grow there. That's where they continue to expand their communities and purchase more land, because we do think that, bigger picture and longer term, that's where a lot of the growth in the country will be.
Well, let's hope we see more. Hey, I want to pivot to last week. Now, we got Home Depot's earnings, better than forecast, even though sales actually down again. That boost in sales, though, mostly for the wrong reason, on storms and extended warmer weather. What does that tell us about the market, the housing market, and, a look ahead, if you can, to Lowe's earnings? Is it going to tell us the same thing this week?
Yeah, so starting with Lowe's, we're looking for a low single-digit decline in same-store sales, which would be the 8th straight quarter of declining same-store sales. There could be some upside to the numbers based on what we did hear from Home Depot. As you mentioned, we've had warm, dry weather across, most of the country for the last several months, and that's provided a better than expected lift to some of the seasonal and outdoor categories. And you also pointed to the hurricane activity. Home Depot called out a $200 million benefit related to the storms, as they sold more items such as, lumber, generators, and that contributed about 50 basis points to same-store sales. Now, we think Lowe's could see an even bigger lift from the storms, just given their exposure to some of the impacted markets. They've got about 25% of their store base in those southern states compared to about 18% for Home Depot. But, stepping back, when we think about the core business, while it does appear to be maybe bouncing along the bottom and stabilizing a little bit, and, comps will certainly be easier in coming quarters, there's still some headwinds out there. You have, consumers who continue to grapple with the cumulative impact of inflation over the last couple of years. Both companies have called out more cautious consumers due to economic uncertainty. And as we've discussed, housing activity is extremely depressed. You've got, volumes at the lowest level in over a decade. So still some difficulties out there for the industry.
Lowe's Q3 earnings out on Tuesday, October existing home sales out on Thursday. Our thanks to Drew Redding, Bloomberg Intelligence U.S. home building analyst. And coming up on Bloomberg Daybreak Weekend, we'll look ahead to the Group of 20 Leaders Summit in Rio de Janeiro. I'm Tom Busby, and this is Bloomberg. This is Bloomberg Daybreak Weekend, our global look ahead at the top stories for investors in the coming week. I'm Tom Busby in New York. Up later in our program, a look ahead to the PBOC's upcoming rate decision. But first, G20 leaders gather in Rio de Janeiro, Brazil this Monday and Tuesday for what will surely be U.S. President Joe Biden's swan song, as focus shifts to President-elect Trump's return. Now, despite the threat of Trump tariffs, dealing with a more volatile White House for Europe, the issue of top concern is Ukraine. For more, let's go to London and bring in Bloomberg Daybreak Europe anchor Caroline Hepker.
Tom, the geopolitical landscape has already shifted radically as the world awaits a Trump White House and Republican control of the US government. The Biden administration is rushing aid to Ukraine in its final weeks in power, with US Secretary of State Antony Blinken saying that every dollar we have at our disposal is being pushed to Ukraine. But others are getting cold feet, like South Korea having second thoughts about the possibility of sending weapons directly to Ukraine. Now, the president-elect pledged on the campaign trail to end the war within 24 hours by getting Russia and Ukraine to negotiate. In a moment, I'm going to get the view on what to expect from the group of 20 leaders who are meeting in Brazil with Bloomberg's Sylvia Westall. But first, I wanted to bring you two perspectives on the security challenges now facing Europe. The former NATO Secretary General Jens Stoltenberg has been discussing this with Bloomberg's Francine Lacqua. She asked him about Donald Trump's claim that he could end the war in Ukraine in a day.
The quickest way to end the war is to lose a war. But that will not bring peace. That will bring occupation of Ukraine. And it will make the whole world more dangerous, because the message then to President Putin, but also to other authoritarian leaders, is that when they use force, when they invade another country, they get what they want. So it's in our security interest to ensure that Ukraine prevails. So the challenge is to end the war in a way that doesn't lead to occupation, but to end the war in a way where Ukraine prevails as a sovereign, independent nation. At some stage, there has to be some kind of political negotiated solution. But you know what happens around the negotiating table is so closely linked to the strength on the battlefield. So if we want a negotiated solution to the war where Ukraine prevails as a democratic state in Europe, then we need to provide military support to Ukraine.
But so what does that look like, that solution? And is there a danger that the U.S. actually, manages to cobble something together, some kind of agreement, without the guarantee from the U.S. side of Ukraine's sovereignty?
Well, it's for Ukrainians to decide what would be acceptable solution. But there has to be at least two elements. One is a line agreed. But second, when such a line is agreed, then we need to ensure that actually it stops there, because we have agreed, or the Ukrainians have agreed lines with Russia before. When they annexed Crimea back in 2014, we had something called Minsk I. There was a line, then Russia violated that, and we got Minsk II, a line further west. And then the Russians waited for 7 years and invaded full-scale Ukraine. So we cannot have what I call Minsk III, yet another line which is not respected. So when a line is agreed, we need some kind of guarantee that Russia doesn't continue after reorganizing their troops, and therefore we need either to arm the Ukrainians so they can deter future aggression themselves, and or some kind of security guarantees, and NATO membership is of course the ultimate security guarantee for Ukraine.
That was the former NATO boss Jens Stoltenberg speaking to Bloomberg's Francine Lacqua. Let's get another view now from Finland, which joined NATO after Russia invaded Ukraine. The Finnish President Alexander Stubb has been speaking to Bloomberg's Jumana Besetchi after his call with the US President-elect. She asked him about his expectations for the second Trump presidency.
I, of course, focus very much on U.S. foreign policy under Trump, and I think his agenda is quite clear. He talks about ending the war in Ukraine, so we discussed that. He talks about ending the war in the Middle East. He talks about the U.S. as a competitor to China. We talked about that. He talked about Europe taking more responsibility for its own defense and security. We talked about that. So I think it's pretty clear speak when you talk about American foreign policy. Then, of course, there will be challenges. Tariffs can be a challenge. Climate issues can be a challenge. But the truth is that throughout history, the United States and Europe have usually seen eye to eye, and I'm sure we'll be doing that again in the next 4 years.
Do you expect perhaps this next term to be less combative towards Europe?
I think the United States needs Europe, but Europe needs to understand that the United States has changed. That means that we need to take more responsibility for what we do, for instance, in terms of security. And when that happens, I think the United States, whose number one competitor is China, will look at Europe and say, okay, about 20%, 25% of our allies are right there in Europe. Let's play ball with those guys.
Can I just pick up on Ukraine? I know you spoke about it with President Trump, and he seems to think that he can secure a peace deal between Russia and Ukraine. If that does happen, what is the likelihood that it's done in a way that's just and fair for Ukraine?
Well, in my mind, Ukraine needs four things. One is territory, and here we don't know where things are going to settle. The second one is security guarantees. So probably territory and security guarantees in these negotiations will go hand in hand. And of course, in my mind, eventually EU membership and NATO membership. The third one is justice, so Russian war criminals indicted. And then the low-hanging fruit is actually number 4, which is reconstruction. It's difficult to say at this stage, but I think we in Europe and the rest of the world needs to understand that Donald Trump is very serious about getting a peace deal sooner rather than later. I have myself said that there's a window of opportunity for these negotiations between the election and the inauguration day. Let's see what happens.
That was Finland's President Alexander Stubb speaking to Bloomberg's Jumana Besetchi at the COP29 climate conference in Baku in Azerbaijan. More than 2.5 years into the war, Ukraine has steadily lost territory to Russia. There are preliminary plans for a meeting between the Ukrainian President Volodymyr Zelensky and President-elect Trump, according to Kyiv's top diplomat, but no timing. Bloomberg's managing editor for Russia, the Middle East and Africa Economy and Government, Sylvia Westall, has been taking me through what to expect from the Group of 20 gathering in Latin America and how much Ukraine will feature.
It's an interesting G20, and it's obviously a big showcase for Lula. It's always sort of, the leaders try and shape kind of what they want this to be about. I mean, Brazil's made it quite clear that they want this summit not to really focus on things like wars, Russia's invasion of Ukraine, the current conflicts in the Middle East, and they want to look at things like trade and climate and finance. But of course, because of world events, other things are going to dominate. And one of those things, as you mentioned before, is Donald Trump, of course. So you've got Biden and Xi planning to meet, but really the focus is on Trump and what happens next. So in that sense, it's a kind of tricky G20 for Brazil to handle, because all the kind of topics it wants to focus on are kind of being overtaken by events, both, in the US and elsewhere in the world.
Ukraine's European allies have been concerned that Trump will pull the plug on the embattled country and push the burden to Europe. Do we expect a major policy shift?
Well, Ukraine at the moment, according to, some of the officials we've talked to in preparations for the G20, isn't really figuring very high on the agenda, again, because Brazil doesn't really want it to. And we know that, there have been discussions each G20 whether President Zelensky will actually turn up or do a virtual address. It doesn't look like that's going to happen. This one, in the last G20, Ukraine was a very sort of prickly topic. And so, Ukraine is very worried looking at the G20 and further on into the sort of Trump era that Trump, will apply pressure on it to give up land in peace talks with Russia and cut back on this financial military support. I think that risk is there. And, that's happening as, Russia's making this sort of important headway on the ground in Ukraine. So Russia feels it's in a stronger position right now. And, the big question is whether, Ukraine, whether the US will eventually allow Ukraine to strike deeper into Russian territory with Western arms. But I do think actually on the Russian side as well, there is concern about what that Trump era might bring. So I think the G20 probably isn't going to offer many clues as to where where that is going, but it's definitely going to highlight some of the concerns that countries involved have.
In terms of Trump's stance, what about the Middle East? Israel obviously hoping that Trump's return to the White House will help in terms of cooperation for them in the Middle East on diplomacy and other issues. Again, how much will that feature? As you say, the hosts of the G20 gathering sort of don't really want conflicts to dominate. How much will we hear about the Middle East?
Well, I think it was going to have to come up because it is, this, still going on, and the conflict spread now into Lebanon with the violence between Hezbollah and Israel. I think, as we look forward to the Trump administration, Trump applied this maximum pressure policy towards Iran when he was last in the White House, and that definitely stoked tensions in the region. And so the expectation is that that's coming up. So I think there's going to be a lot of, looking forward, towards questions about whether there can be any kind of ceasefire between Israel and Hezbollah, what can be happening next, and this quite big question mark over where that policy will head in the US, and whether these appointments of these sort of very sort of pro-Israel members to Trump's administration will mean that that kind of aggravates tensions in the Middle East and alienates Arab countries as well.
Russia's Foreign Minister Sergei Lavrov will be attending the summit in Brazil on Monday and Tuesday, representing Russia, not Putin himself. Why, and what will be Russia's role here?
Sure. So it's very difficult for Putin to pop up in places around the world because of this International Criminal Court arrest warrant for war crimes due to the invasion of Ukraine. He also has skipped several meetings, elsewhere in the world. That included in South Africa. South Africa politely asked Putin not to turn up because these countries, like Brazil as well, would be obligated to arrest him under those rules of the ICC. That's Lavrov is usually the person who takes his place. Russia has been using these international events like the BRICS that it hosted earlier this year in Russia and elsewhere to show that Russia is not isolated from the world. Though, of course, if Putin can't turn up to these events, it does showcase its isolation. So I think Russia will be using that as a platform to justify its invasion of Ukraine, explain its perspective on what it thinks will happen next. And Russia's definitely in a position of a bit more strength right now because of what's happening on the battlefield and the expectation that despite the big uncertainties about what Trump will bring, that his stance on Ukraine will perhaps be beneficial to Russia.
That was Sylvia Westall, Bloomberg's managing editor for Russia, the Middle East and Africa economy and government. European Union leaders are trying to work out whether they can keep the Ukrainian war effort going if Trump decides to shut off support from the US. Certainly, much in the world is being reconsidered after the presidential election and potentially with big consequences for Europe. I'm Caroline Hepker here in London. You can catch us every weekday morning for Bloomberg Daybreak Europe beginning at 6 a.m. in London. That's 1 a.m. on Wall Street. Tom.
Thank you, Caroline. And coming up on Bloomberg Daybreak Weekend, a look ahead to a rate decision this week from the PBOC. I'm Tom Busby, and this is Bloomberg. This is Bloomberg Daybreak Weekend, our global look at the top stories in the coming week from our Daybreak anchors all around the world. This week, a big decision on rates from the People's Bank of China. For more, let's go to Daybreak Asia podcast host Doug Krisner.
Tom, since late September, the Chinese government has launched coordinated support focused on lifting economic growth and fighting deflation. And recently, taxes for both home buyers and property developers have been cut as the government tries to put a floor under falling prices. Now, in the week ahead, the Chinese central bank will set its rate policy. For a preview, I'm joined by Eric Zhu, who covers China for Bloomberg Economics. Eric joins us from our studios in Hong Kong. Eric, thanks for your time. We recently got the inflation data for China, and I'm going to ask you to start there. Consumer prices, for example, showing their first pickup in the core rate since April. And I was reading some of your analysis. You called it an encouraging sign in an otherwise weak report. Perhaps a little more troubling, the fact that factory gate deflation deepened. Is this something the PBOC must consider at its next meeting?
I think PBOC has signaled recently that, the price has become more important for their policy decision. I think one of their targets is, of course, except for, supporting the recovery, they really want to, get the economy out of the risk of deflation. So I think they will try, their best, to try to boost the prices up. But I think PBOC alone is unable to fulfill that goal. We do need, other departments like fiscal, especially fiscal policy, also to work their way, right? So it's not only the PBOC's own job.
What about the stimulus measures that Beijing has already rolled out? How would you evaluate them?
First of all, it's a big shift. It's not only from our economics view. We also, chat with investors, with clients, and all the people. Most of the people think since late September, this is a big policy shift, which signals that the government is now really willing to fix the economic issues. They have rolled out, a couple of different measures. And I think one encouraging sign is they also started to, address some structural issues, not only, short-term cyclical things like, local government debt swap. They're also trying to fix some oversupply in the housing market. So they start to address those problems. But I think one remaining concern is still how soon they can, really deliver those policies. They have made a lot of announcements. They have committed to do this, committed to do that. But I think on the ground, the people were still, looking for, especially for local governments, how are they going to really deliver those policies? I think the October data has shown some initial rebound, but I think that's more related to some sentiment.
This is coming at a very interesting time because we have a new administration in the U.S. that will be taking office in January when Donald Trump is sworn in for the second time. One of the things that he has discussed mightily is tariffs on imported goods from China. Now, we know that the export sector has been a bright spot for the Chinese economy. Mm-hmm. To what extent is there a risk here right now with some more tariffs?
I think it's a real risk, and it can be a very big risk because, of course, we don't know the details yet, the timetable, so how Trump is going to start his tariff. But definitely, we think we're expecting probably another the second, the trade war in his second term. But the only thing certain is whether we're going to get 60% tariff like Trump had said during his campaign. So if that 60% is implemented, that will be a very big risk because we have some model that predicting a 60% tariff can essentially, reduce China-U.S. trade basically, near to zero. So that's a very big shock to the economy. But in the end, we think probably we won't get that as high as that. There still will be negotiation. There will still be bargaining. So the final result is still highly uncertain at this point. But we think China will be, preparing for the worst scenario, and they're also, we're planning for what kind of retaliation China will do, what kind of solutions they can do to, try to mitigate to reduce the tariff impact as much as they can.
Yeah, there's been a lot of questioning as to whether or not this is really the beginning of a negotiating strategy. Do you think there is room between Washington and Beijing to negotiate a trade policy that benefits both parties equally?
I think so. I think there's still room for negotiation. At least, China, probably compared to the first time Trump was in office, China would have now more tools, to retaliate, including more export control, on those rare materials. China has most of the outputs. So I think also considering that Trump has to consider what's the tariff impact on the domestic economy as well, right? If you impose such a high tariff, that would definitely also influence your domestic consumers. So I think at the end, Trump's side will also do some calculation, right? What kinds of goods we want to impose that will have the minimum impact on my own economy. And at the same time, China would also, try to negotiate, try to have something on the table telling Trump, so what we're going to retaliate if you do this, if you do that. And at the end, let's see what negotiation can go on.
Eric, thanks so much for being with us. Bloomberg's Eric Chu, who covers China for Bloomberg Economics. We move next to geopolitics and the upcoming G20 summit in Rio de Janeiro, Brazil. The list of attendees reflects major changes in leadership among several member nations. Mexico's new president, Claudia Sheinbaum, will be there, as will Britain's new Prime Minister, Keir Starmer. A weakened German Chancellor Olaf Scholz will attend, along with the lame duck U.S. President Joe Biden. And the shadow of his successor, President-elect Donald Trump, I think it's fair to say, will loom large. For a closer look at what we might expect, we're joined by Daniel Tenkate. He is Asia EcoGov Executive Editor for Bloomberg News. Dan joins us from our studios in Hong Kong. The G20, I think, represents some 85% of global GDP, 75% of world trade. It doesn't appear there is going to be a group that could challenge the G20, and I'm thinking of the recent summit of the BRICS Plus nations hosted by Vladimir Putin in Kazan, Russia. I mean, is it safe to say that there's not going to be a rival for the G20 for some time?
Well, the G20 really brings these various groups together. So you have the G7 on the one hand, which is the U.S. and its allies, basically. And then you have the BRICS Plus agreement, which is grouping, which is expanding persistently. But China is really, and Russia, are both trying to use that group to advance their own interests and use it as a counterweight to the G7 and the U.S.-led world order. Now, the G20 kind of brings these groups together in a lot of ways and is the only forum really that has all of them in one place. So they can really haggle over kind of the tough issues facing the globe at any given time.
I was reading a piece in Foreign Affairs magazine, and one line from this piece struck me. The essence of Trump's approach to foreign policy is naked transactionalism, and that remains unchanged. Is that a fair statement?
Yeah, I mean, we're already hearing about countries trying to say, okay, what can we give Trump? What do we have to offer? And usually that involves what can we buy from the U.S.? Can we buy more energy? Can we buy more corn, agricultural goods? You need to come in with some sort of offer with Trump. Now, there is kind of a question about whether Trump's view of tariffs has changed. In his first term, he was talking a lot about the U.S. trade deficit, and I think that is top of mind for Trump. But he's also talked about tariffs as a way to generate revenues in the U.S. and to lower investment. So that's the big question. Is he going to come right out on day one with 60% tariffs on China and 20% tariffs on the rest of the world?
One of the things that I think the G20 will have to deal with is the issue of Ukraine. The Biden administration took the lead on imposing sanctions on Russia and many Russian officials after Ukraine was invaded. Now we have North Korean troops joining Russian forces near the border with Ukraine. Is this going to be an important pressure point that we'll try to get resolved at this summit, or do you think it's going to take some time for clarity to emerge?
Well, certainly the war in Ukraine has dominated G20 discussions since Vladimir Putin invaded in 2022. So no doubt that will be a key talking point. The question really is, how does Trump change the conversation there? Before it was kind of the G7 aligning up against Russia primarily on how strong the language should be in condemning Russia for the invasion. Trump has promised to end the war. There's a lot of exhaustion among a lot of the countries, particularly in the global south, to end the war. And so the big question would be whether you see some more conciliatory language, people talking about talks, negotiations. How do we put an end to the war? So that could be the big difference this time around.
Typically, when we think of economic issues, it's the G20 summit of finance ministers that kind of tackles those issues. But I was struck by a lot of commentary recently regarding Trump's reelection as this being another example of an anti-incumbency push across a number of jurisdictions globally. When you consider that fact, that may have been driven largely by dissatisfaction with the way a number of economies have been performing, the stubbornness of inflation. Are economic issues beyond trade going to come up at this meeting, do you think, independent of the G20 finance ministers meeting?
Yeah, certainly. I mean, the finance ministers meetings kind of set the table for the leaders meetings, both at APEC and at the G20. And if you look back at who's still around from the G7 a few months ago, you'll have Biden representing the U.S. at this meeting, both meetings, the APEC and G20, but he's not going to be around much longer. You have a new prime minister in Japan, you have a new prime minister in the UK. A lot of other countries have seen leadership changes. Trudeau is hanging by the ropes in Canada. So a lot of the incumbents have taken a beating this year in the year of elections. And inflation's a big reason for that. Has come down of late, but voters, are still struck over the past couple of years by higher prices. They see it every time they go to the grocery store. And so that's certainly going to hang over everything that they discuss this week.
Dan, thanks so much for helping us set up the G20 summit in the coming week. He's Dan Tenkate, Bloomberg News Asia EcoGov Executive Editor, joining us from our studios in Hong Kong. I'm Doug Krisner. Catch us weekdays for the Bloomberg Daybreak Asia podcast. It's available wherever you get your podcast. Tom?
Thanks, Doug. And that does it for this edition of Bloomberg Daybreak Weekend. Join us again Monday morning at 5 a.m. Wall Street time for the latest on markets overseas and the news you need to start your day. I'm Tom Busby. Stay with us. Top stories and global business headlines are coming up right now.